afternoon, everyone. I'm Gordon Rogers from Yorkshire Water, and I lead on our approach to sustainability. And I guess having listened to everything fascinating this morning, I feel quite like I'm on the front line. I'm trying to put this into practical application in a water company who, as we heard first thing this morning from Tony, was probably water companies are perhaps the most obvious place to start with being ultimately reliant on natural capital at the very heart of their business models. And if you think about our production, taking 1 billion litres of water from the environment every single day in order to supply 5 million domestic customers, 135,000 businesses, and then entirely reliant on the environment again to safely return it, reliant on that carrying capacity of the environment to safely return that treated wastewater once we collect it again. So perhaps we're at the front line of this. Absolutely critical to our operation and our business model, but of course no less critical to any other business, perhaps just less obvious. But anyhow, so I'm going to take you through, as Mark mentioned, we pilot tested the Giraffe Natural Capital Protocol, and it was quite an eye-opening experience for us. And really we're on perhaps 2 years in, right at the very early stages of a journey, really, to embed natural capital and the other capitals firmly within our decision-making process. We've got some quite lofty ambitions that I'm trying to push into our business, and we're hoping that our next price review is that in our sector, we have to put a plan in for about £4 billion of investment in 2018 to our regulator. I'm firmly pushing natural capital within that plan to start shaping things. So anyway, let me take you on to focus on this pilot test for just a couple of slides. So we focused on somewhere called Rivlin Water Treatment Works, which supplies Sheffield. It just sits outside Sheffield on the border of the Peak District National Park in beautiful Yorkshire. And it's a treatment works that's been there for a number of years, several decades. But we are seeing, just as again Tony touched on right at the beginning this morning, we're seeing the water sources in the Peak District that supply this site deteriorating. It's very much peaking degradation, as Tony touched on. And yes, we absolutely have a huge multi-million-pound catchment management plan, trying to restore that peak, protect it, just as Tony was describing. All the water companies are focused on that. But equally, we can't wait on that. That's quite a slow burn solution. It's taking years to undo decades of damage. So we have acute risks here and now, and this is very much driving this scheme. So we have a £24 million capital investment scheme. It's not quite finished yet. It's about a year into its construction. And back in spring this year, we used the protocol and worked with AECOM to try and economically value, and we did try and economically value in this case some of the key ecosystem services and the natural capital impact within this. So we have these 3 scenarios. The baseline scenario is if we just left the water treatment works alone. That wasn't actually an option because of the deterioration, but it's a great comparator. And then a notional solution that was put into our last price review business plan submission for this scheme, which was a very traditional approach, quite high energy intensive scheme, shown in red on the footprint. 2 buildings, what's called a DAF plant, a dissolved air flotation technology, plus a slightly more unusual MIEX plant, some innovative technology, but becoming fairly standardised in the industry, but fairly energy intensive. And you can see in the red boundary there, touching into some relatively low-grade woodland, if we're honest. And then actually, after our optioneering processes, a chosen solution where we've actually gone with quite an interesting approach from a natural capital perspective, which is why we chose this scheme in the first place, where we've submerged the building. It's half submerged underground, it's got a green roof, and we've gone for a low energy approach. Largely driven, I'll be totally upfront, no greenwash, whoever raised that question. This is on the edge of the Peak District National Park, so what we didn't want was planning constraints and years of delay on the scheme. So that was what has driven the scheme. We looked retrospectively in this project to meet the timescales of the coalition and getting some feedback through to that. So we weren't trying to shape this solution in this case. Rather, what we're focused on is how do we change our long-term process and embed this in a permanent approach, because we're spending about £1 million a day on schemes like this up and down Yorkshire. So if I take you on to some findings, the critical bit. So as I say, we did economically value the focus in this case, and totally support the debate around whether you need to do that, and I'll come on to a different example in a second. But through some materiality assessment, we identified these 4 ecosystem services as the most critical to this site. I should say there's a full report on our website, so if you search for Natural Capital Yorkshire Water, you'll come up with the case study. It's on our website and the methodology is there. for all to see. Clearly, looking at those 4 services, carbon and climate regulation was absolutely the most important. That's no surprise to us. We've been focused on carbon and energy for at least a decade, doing some quite interesting, ambitious stuff again on that front. With renewables and low energy processes and so on, and some success, but a long way to go. But equally, some other things that we don't so traditionally look at on air quality regulation, the loss of some woodland and some grassland, the pollination factor and the benefit of introducing that green roof, which is quite an important one for me, a sustainability champion for Yorkshire Water. We don't do green roofs very often. Can we use this evidence to get some more? And then perhaps the hardest to quantify was this cultural and spiritual valuation of this being on a road next to the Peak District, a very green, aesthetically pleasing area. And 150,000 was actually the cost that it took to submerge the building and put the green roof on. So it's quite difficult to quantify. And you can see on the latter columns there this confidence rating, which again the protocol encourages, and rightly so, trying to be very transparent and clear about how robust we are with our data and with our economic valuation methodologies. And they're each different, and as I say, they're in the case study on the website, so you can go and drill into all of those things. So some of them are strong, quite good processes on carbon valuation, for example, quite mature area, more limited in other areas. But I think what we pull out of that is that our chosen solution, in this case not driven by natural capital assessment, this is purely retrospective, but having gone for that low energy solution, we've saved approximately, £3-4 million over the life of that project in avoided carbon emissions, plus there's a little bit of sequestration. It wasn't a complete exercise. We didn't look at the embedded emissions within that carbon assessment, and I can tell you, having seen the site, whilst it's got a green roof, there's also lots of concrete and lots of metal in that structure. So I suspect we had quite a substantial embedded carbon impact in that scheme. Somewhere we're focused on internally at the moment, quite a big push to build some models around that. Clearly gives us somewhere to focus and lots of information. The good news is that we made a better impact through our optioneering, our standard optioneering approach, so we can get even better still, but ultimately still a net negative intervention over the 40-year assessment that we looked at. So if we're truly to get to sustainable, we've still got a long way to go. So, just to crack on. Humberston is a completely different approach. So whilst on the one hand there at Rivlin we had a very numeric, we had a consultant, spent about 20 grand with a consultant, some real technical expertise. At Humberston we've done a completely different approach, a workshop within 3 hours, an entirely qualitative expert panel, strategic view of things, has actually shaped where we're going on a land management option in this case. If you Google Humberston Farm, there's loads in the media about it. It's been quite successful. But this was a site that came back from 80-year multi-generational tenancy to a farmer in North Yorkshire, and they handed the site back when they wanted to retire. So we had this blank slate farm, and what do we do with it? My land team were itching just to throw it into another tenancy. That would be their traditional approach. And I said, hold on a minute, and thankfully my chief exec was with me, encouraging us along in the right way, and we said, what are the best options here that would deliver best benefit to us as a corporate commercial enterprise, but equally to society in its broadest sense? And so we looked at a range of strategic options for this site, as I say, just in a couple of hours workshop, and we ranked about 15 environmental, social, and financial metrics. You can see some of them are ecosystem services, but effectively we came up with a list that works for us as a business. Against our strategic objectives, and then a bit of a simple scoring mechanism, +3 to -3 on our impact. Are we doing good or bad? And actually it showed that their traditional approaches were about sort of neutral. Managing the site for nature and a sustainable farming exemplar site was far and away a better option. And so we've just literally a couple of weeks ago signed the tenancy with a young 28-year-old farmer who's really passionate about sustainable farming techniques and setting up a partnership management function on this site. So our ambition here is really to manage the site for nature is the term they've latched onto, but trying to show that we can have sustainable agricultural farming in the uplands here, effectively sheep farming on a peatland trip SI. So we can protect the water quality, we can deliver the carbon sequestration, we can deliver the biodiversity benefits, we can have recreation, the layering that Kathy talked about earlier. So it doesn't have to be complicated, is my message. You can do it quite simply. And then just to end on some learning considerations that I thought might be valuable to you all. Um, I absolutely applaud the protocol and all the work and focus on natural capital assessment generally. It has helped us broaden our examination of opportunities and risks, giving it structure and, most importantly, giving it credibility by having a protocol that's backed by hundreds of organisations and gone through some very good, robust building approaches. So I absolutely applaud it. I think the big debate about whether we should economically value, and I totally get the debate there, and as a sustainability person, I say, do you need that really? But actually, when I've landed the Rivlin case with those pound notes on it and put it in front of finance communities, project managers, directors, and they go, oh, so that's a £10 million impact from that carbon approach in a £24 million financial capital scheme. They suddenly prick up their ears, whereas if I'd said 400,000 tonnes of carbon, they go, yeah. So I think it has definitely given us a richer dialogue and landed things well. Of course, it's not all plain sailing. We're very much focused on automation and how do we get this type of thinking within our risk prioritization tools, which are being upgraded at the moment, and natural and social capital are firmly being thought of within that. Quite head-scratchy type stuff to make it in a systematized way, but that's what we want. At the moment, it's too data-intensive, it's too admin bureaucratic to do it on every scheme systematically. We'd need a whole new finance function, which of course we can't afford, but we can automate it and get it right. So that's our ambition there. Very much focused on the integrated approach, as Mark touched on at the beginning. As a water company, we're typically taking from the environment to give to society a social imperative in their water service. So we do, straight from the get-go, have trade-offs that we need to think about. So very much we're not just thinking about natural capital. And then really just to leave you with the biggest challenge that we're all going to face. We're a regulated commercial organisation, so it's, in some sense it's a little bit easier for us, but we're still getting to the point, as we saw in the Rivlin example, we can make a less bad solution, but if we're to get to a truly sustainable net positive solution, we're talking about hard commercial expenditure for societal benefit. And all of those Rivlin costs are entirely off our profit and loss account at the moment. They shouldn't be, but they are. That's the way we are at the moment. How does government and organisations, how do we shift these things so that the polluter pays ultimately? And we can really see these interventions and it will encourage us all in the right direction. So there's our challenge going forward. Thank you.